The first day we will be looking at as we start this video is Friday, February 15th, 2019. At the end of 2018, the market had a huge break, particularly in December, as a result of a total lack of liquidity. Once 2019 got underway, the market has been auctioning straight higher. 215, the day we're looking at, is the day prior to a holiday. So the following Monday is a holiday. The low on 215 matches the high, the overnight high from 213. Now that's not normally that significant, other than you see that the market picked a very visual reference. Additionally, there is no excess on the 215 low. Having no excess makes that a poor low, and it's questionable. Also, it is a gap. The market has gapped higher, so we're looking at a gap. We're looking at a gap that has no excess. Additionally, we are looking at a day following the gap, or the day of the gap, that has no elongation. As the market begins to trade following the 215 gap, we will see that the market does trade higher. So on Sunday night, 217, the market trades higher. So that means in this large move that we have had beginning in 2019, the high for that rally has been made in the overnight market. While that could last, the odds of that lasting are slim. As you move to the right, you will see a very narrow range. That very narrow range was electronic trading on the Monday holiday. Moving once more to the right, you will see the overnight trade on Monday the 18th. Overnight trade on Monday the 18th did not trade and make the overnight high from Sunday. So the first place we're going to trade or start trading today is going to be Tuesday, 219. You have some references to start with. You can see the overnight low. You can see the prominent point of control from 215. Prominent and very prominent points of control are always very visual references. We also will see half back from Monday night. Overnight half backs are always very decent references. They help us understand if the day time frame or short time frame is in charge, or if we're seeing the longer time frame. When the longer time frame is in charge, the market barely shows any problem going through these levels. When these levels become serious levels, that's usually an indication that we're looking at very short-term day time frame and slightly longer traders. The same goes for almost any reference. All right, let's start the session and trading on 219.
What speed would you like to start out at, Jim?
Let's start out at about 3 times.
Okay.
The first thing we're going to be looking at is we want to see who is in charge of this market. Are we up longer time frame, or do we mostly have very short-term time frames in command? You'll see the yellow line near the bottom, and that is where the market is about to open. Okay, the market is open, and the low is exactly the same low for the day time frame, because the market opens the last trade from the day time frame, or the last trade overnight is where the day time frame opens. So the market is we're at 3 times speed. The market has come off the opening. So far, we have an excess low. Remember,
The 8-period lows of right now would be considered weak though, right? Because it matches the overnight low?
no, it wouldn't. And the reason it wouldn't is the overnight low was made as the day time frame was opening. So that would be an aberration. But no, it is not considered weak. Okay, so the market continues to trade higher. We've just gone past the 215 prominent point of control, or the prior Friday's prominent point of control, which is always a reference. The next reference is the market is trading at half back from the 15th. Is also a reference. The next upward reference would be half back from overnight on Monday. So far, the market is showing confidence. You can see where the market's going right now. It's going for half back from overnight. Look to the far left from Friday 215, and you'll see that right now we are trading within the balance range from that Friday. Been no give back so far. So we said the next reference will be half back from Monday night. So another way to look at this market, we opened within Friday's range. Now this is Tuesday, Monday was a holiday. We are trading within Friday's range. So the market is in balance. When a market opens in balance, the odds suggest more rotation. The high that was made just a single tick or at the overnight half back level. When I look at all these single prints, that appears to be too many single prints for having opened within Friday's range. That doesn't mean that they won't last, but it seems to be a lot. Also, the high is now trading at overnight half back, which again is a very mechanical reference. Again, still consider that at half back. See the market softening a bit. Traded at half back, get a little bit of softening. We are still within Friday's range. That's a little difficult to see with all the overnight trade that went on, but just keep in mind, we are still within the range from 215. So this is a balanced day, and the odds favor rotation. Or put another way, there's been no meaningful change since Friday. Also on Friday, you can see we had a spike to the upside late Friday afternoon. The base of that spike, which is also represents half back from overnight, is also a reference. The base of the spike is support coming down, its resistance going up. Again, it's a very mechanical reference. So one of the first things you want to keep in mind right now is that the high so far this morning is exactly at half back. That is a mechanical high. It is an indication that the selling at that level was from the weaker, shorter time frame traders.
Actually, the high from today so far is just one tick above that, above the overnight half back. So, but it's just within one tick.
Yeah, it is. Well, the half back is in between. It's not really that serious. But what you see the market doing is the market is using half back as its reference. And when you see that, that's an indication that we are not looking at serious buying. We may get more buying, but if we had serious buying in there, we would go through that very easily. Okay, so the market continues higher in a period above half back. Still seems to be far too many single prints in here. So in other words, it's another way to say the market is just too enthusiastic as we open on the 18th.
You mean the 19th?
On the 19th, I'm sorry. Okay, how much time do we have left before we change?
Less than 9 minutes.
Okay, so just to keep in mind, we've traded about 20 minutes and the market continues straight higher in that 20 minutes. As we said, that seems to be an awful lot of single prints, and particularly from the fact that the pace is relatively slow in here this morning. We've gone a long way. Pace is relatively slow. The market is trading right around the half back from overnight. What that tells us is the market is using a very visual level in order to guide its trading. When traders are using very visual levels, that's just an indication that we're looking at mostly short-term traders. And that is very important for you to think about early in the morning, because you could look at something like this with all these single prints, and the thing that might come to your mind is a trend day. And because normally you get that many single prints, you start thinking trend day. When you look and you say, wait, we're all within Friday's range, the market is trading, around half back. Too many single prints with being for being within Friday's range. The odds of a trend day are low. Doesn't mean we're not going to get it, but this is one of these assessments that you make very early on in the morning. It's easy to look at that and say, well, this could be a trend day. And it may be. I'm just saying that when I look at it, I'm suspicious because of the pace as well as the great number of single prints all within the previous day's range. And I think that we would see the market moving substantially higher and above Friday's range fairly early if there was a trend day in store. Okay, so the market going to change time. We're going to stay here for 3 minutes, or when the market's going to change in about a minute, we will change because we're at 3 times, and then we're going to take a look at what the market looks like as we change into the second period. The next reference would be the very prominent point of control from overnight. The more prominent a point of control is, whether it be during the daytime frame or overnight, the greater the odds that the market will trade to that level. Okay, so we've We've changed time periods. Okay, let's speed it up to about 7 times. I just wanted you to see the market open and get some sense. Remember, we said the chances are there's too many single prints. The market just seems to be too enthusiastic for opening within a prior day's range. Doesn't mean they won't last. It's just an assessment that I'm making, and we'll see how that plays out. And these are assessments that you make every day. What I'm trying to say is I'm not getting too excited about the substantial price move that's made early in the session. It would be very early to do that, and I may clearly be wrong, but I'm just looking at the pace of it. And usually, if you get that many single prints, the market's moved much faster. It spent the whole move much faster and easily would be up to the very prominent point of control and the overnight high. Okay, now we are one time framing higher. That's too early to make much of an assessment about that, but it is an observation. Also, we continue to say the downside support level, a very short-term basis, is the overnight half back. Why? Because it's a very visual level. The next visual upside reference is, of course, the very prominent point of control from overnight. Continue to focus on the fact that we are still within Friday's range. Okay, and we're playing now what? It's 7 times? Regular
Yes,
speed?
would you like me to speed it up?
No, that's okay. Okay, we've made the very prominent point of control. Once we've made the very prominent point of control, the next reference is right here, which is also Friday's high. Friday's high is, again, a very visual reference, and we're exactly there. So the B period high is poor high because it is exactly at the overnight high. So the odds of taking that high out are very good.
You mean it's a weak high?
It's a weak high. It's a weak high. So it's a weak high because it's exactly at Friday's high. So notice the market is starting to show some give back from a very mechanical level. When markets react, pretty much at mechanical levels, it gives you an indication we're looking at very short-term traders. Still a lot of single prints for still being within Friday's range. Notice value now, and we're always focusing on value. The odds are that value is going to build higher relative to Friday. The more time we spend up here, the greater the odds that value will be higher relative to Friday. Also, the B period high also matches the recovery high made during the daytime frame session. It's a recovery high since the December low. The chances are that the high, the B period high, which matches Friday's high, which is also the recovery high since the start of this recovery in the new year, the odds are very low that that will last us throughout the session. Again, it's a very mechanical level. Any trader can figure out what the recovery high is, as well as be able to see what Friday's high is. Okay, so we've changed time periods. B period was very narrow in range. C period matching the B period low. Very mechanical match. Okay, we've now taken out some, not a lot, we've taken out some of those single A period prints. The high we suspect is not any good because it matches Friday's high, which matches the recovery high. Okay, the market is not one time framing because C period took out B period. Notice this little stop here is right around the Sunday night low. The next lower left reference down there is half back from this morning. You see the blue line, and there's Jen's arrows right on it. The mechanical low, C period mechanical low, exactly at half back. Again, we're seeing many mechanical references this morning. The chances are that we have very weak short-term traders in the market today. C period low exactly at half back. It's a weak low when it's exactly at another reference. So we're seeing a rally from that exact low. And that is something you really want to pay attention to. We call it attention to detail. When the market rallies from a very weak low, meaning a very mechanical low, that is an indication it is probably very short-term traders, and it is not strong buying. Remember, we are still also within Friday's range. Value is building higher. There's a lot to keep track of. The most important thing I saw this morning was not to get too enthusiastic by the early price move. Okay, we are not one time framing higher. We don't think today's high, we think the odds of today's high lasting are very low because it's exactly matching Friday's high, and it would be unusual for that to also be the recovery high since the market reversal or strong rally starting in January. Okay, the low, and we said before we're going to change the speed, we said C period low is very questionable. Jen, let's speed it up to about 12 times. What is important about today? The reason we're using this as part of the Nuance series, it is a day that is almost totally controlled by the shortest of short-term traders. There's, as we see the day goes on, very little evidence of any long-term money or traders even coming into the market. When you have these kind of days, it's extremely important that you watch these short-term references and you know who you are competing against. So right now, you're competing against other very short-term traders. Okay, so now we're inside the C period range. The C period low is weak. The B period high is questionable because it's exactly at the Friday high. These are days that it's very easy for you to get yourself in trouble, particularly when you had, some aggressive price move coming off of the early morning low. A lot of traders will start seeing trend day, and they get overly excited and they start chasing price. Probably not a trend day because we're not one time framing. Okay, we said early on, let's stop for a second. We said early on, the odds were low that the B period high would be lasting. Okay, now let's think about that from a short-term trade perspective. You have some single prints this morning. You're still within Friday's range, at least at the early point, the early view, we said the odds are pretty good that this will be a rotational trading day. So if you have a high that you suspect will not last, you get a pullback, that is a time you may want to take a short-term buy. Now, that's everybody's own decision. But if you're looking for trades, and again, we say don't go look for trade, but let the trade come to you. To me, that is the potential of a trade coming to you. You have the B period high matching the Friday high, and then there's also the recovery high from the 2019 rally. The odds of that remaining throughout the session are poor. So when you have those odds of that not lasting, you get a pullback. That is a legitimate place for a short-term trade entry. Now the question everybody says, well, exactly where would you get in? Exactly where would you get out? I don't have the answer to that question. And I don't trade that way. I'm not looking for exactness. I'm looking for a pullback, and someplace in there pulls back and gets quiet. That's where I will take a long position if I'm going to do that trade. Okay, let's continue to play. It's very important for you to remember what took place early this morning, because we're going to see some important trade information later in this session, which is also why we chose it for the Nuance series. Okay, D period fell one tick short of taking out the B period high. So the B period high is now both poor and weak, no excess, and it matches Friday's high. So the chances have just greatly increased that high will be taken out. Still rotational, still within Friday's range. Now here's a question that comes up. What if you did take that pullback and buy? Now when the market's way back here, what do? Well, if I did that trade, I take a little bit of heat because I just think the odds of taking the high are good. But it can make you very uncomfortable, and sometimes we do have to sweat the trades out. But now, since it came back that far, if it does take the high out, then once it takes that high out, I'm probably pretty quick to go out of the trade and take the trade off because the confidence has not been high. Okay, we said there were good odds it would be taken out, and it was. Once that high is taken out, that high now becomes support. Now let's stop for just a second. I don't remember what happened on this day. I remember the end of it. I don't remember what happens right in here. But remember, and I'm only talking for myself, if I took a pullback long because I thought the B period high would be taken out, and then the D period came up and fell one tick short of B period, market trades back off, and I said that's a point you sweat a little bit because that's a big pullback, if you're doing short-term trade. But when I see that, and I said, okay, the market doesn't have that much confidence. So if I have a short-term trade on, as soon as that B period high is taken out, I liquidate my long trade. I don't sit around, I don't overthink the market. I get out. If I'm wrong, I'm wrong. I'll come back and look at it again. Okay, let's continue to play. So the next target to the upside would be the overnight high. And it's where the market is trying to go. It's got the stops at the overnight high. The next trade would be the high from Sunday night. Now let's stop for a second. Okay, clearly you can see that my decision to get out of that trade was not the best decision. I'm only telling you what I do. Another thing you could have done is just pull your stop up. We don't always do this right. Now, I don't know if I'd have been in that trade or not, but I'm just giving you some ideas, and you can see sometimes I'm right, sometimes I'm not. My reasoning was that the confidence wasn't that high. Clearly, that was not a particularly good decision. Okay, now the market is at the overnight high, one tick above the overnight high from Sunday night. It is also now, once again, the recovery high. So the recovery high, starting in the January rally, is now been made in the overnight market. I'm sorry, has now been made in the daytime frame market. However, there is no excess because it is a single tick. It's a good high because there's excess. It's a weak high because it's exactly at the overnight high from Sunday. So the odds are low that that will be maintained throughout the session. Okay, let's continue to play. See how strung out this day is with the single print A's on the bottom and now all the single prints in E period. Okay, let's stop for a second. Once again, we're at a new high. The market's now been open for a little over 2.5 hours. We have taken out the Sunday night overnight high. That Sunday night overnight high now becomes support. If there's anything really meaningful on the upside, we hold above that high and start finding upper price acceptance. I'm going to say that the odds are low because I think there was too many single prints on the bottom. We did come out and take those out, take some of them out. A lot of single prints here in E period. Again, it's a market that's very emotional, and the market has gone multiple times to very exacting price areas, which is an indication that we're looking at daytime frame traders rather than longer term money. Okay, let's continue to play. We're what, 15 times?
We are at 12 times.
Okay, 12 times. So we're moving pretty quickly. Okay, F period came back exactly to the overnight high, bounced. Now we're back down through it. Okay, we said it felt like too many single prints. There's too much emotion in this market this morning. There'll be a lot of confusion out there. People asking, well, how many is too many single prints? And people would like more direct answers. I can't give you more direct answers. It's just when you look at it and you watch the market trading and you see it go to the exacting levels so many times, it's just a feel that it's just when those single prints are usually an indication of emotion. It's emotional trading rather than really good, strong buying. And it's also usually an indication that we've got a lot of very short-term traders in here. Okay, we have a poor high because there is no excess. So again, the odds are good that before the session is over, we will go back up and take out the EF high. The next support level on the downside will be the overnight high. Okay, change time periods. F period was a relatively narrow range. We said the EF high did not look good. Okay, one more time, we've stopped one time framing. That's an important observation. If you had a trend day, normally you only stop one time framing once until maybe very late in the session. We stopped one time framing in C period. We've now stopped one time framing higher in G period. It's an indication that we don't have a trend day. Okay, the G period low was a single tick above the overnight high. That is a weak reference, being exact. Notice one more time, we're getting traders going to exact levels. Continue to repeat myself. That is an extremely important observation. The more you see the market go to exact levels, the greater the odds that you are competing against very short-term traders. The shorter the trader, the shorter the time frame, the greater the odds that they will give up their positions anytime something appears to be wrong, meaning they can liquidate very quickly. Okay, we said the EF high did not look good. Notice the G period high was just a single tick above the Sunday night overnight high. We don't always go back and look 2 sessions back. It's just that these 2 overnight ranges are what took place between Friday's day time frame session and the day after the holiday here on Tuesday. Okay, very spread out market. When the market is this spread out, the chances are very low that we're going to keep that market, that spread out structure throughout the session. Can it happen? Of course. I'm just pointing out things that are just low odds. Okay, G and H period match, both at the overnight high. Okay, we've H period took out the G period low, and we've taken back some more of those single E period prints. We said it looked like too many. There'll be a lot of questions. How many is too many? I can't answer that. You're just looking at and getting a feel for the overall day. We wanted to show this day because it's a very difficult day to trade, but it's mostly all extremely short-term traders. The shorter the trader, shorter the time frame of the trader, the more fickle they are and the quicker they are to give up their positions. When you've got stronger money in, the market tends to move directionally in a much more confident manner. Remember, we still have a poor high because there's no excess on the high. Okay, let's speed it. We're at what, 12 times?
Yes.
Let's speed it up to about 20. I just want you to see this day. Now, remember, we're playing a very fast speed time. Now, 20 times what you would normally be looking at. So now the market's actually one time framing lower. Again, what do we expect today? We thought the odds are where it was a rotational day. Now value is clearly moving higher. Value is clearly moving higher, but we're still showing a lot of rotation. Okay. So the question now, do we stop one time framing lower? A lot of rotation. The odds are we will stop one time framing lower because it is a very questionable high. Okay, notice the J period low. The J period low is a single tick above the overnight high. That is a very, very mechanical level. When you see that happen, who do you think made that low in J period? Do you think the longer time frame, stronger money bought a single tick above the overnight high? The chances are no. The chances are it's very mechanical, day time frame, short-term money. Again, that is a nuance that it is very easy to overlook, but you don't want to overlook it. There's things that can confuse you in here today, but you want to maybe be sure to recognize that that low, which then sparked a rally, is a single tick above the overnight high. Now we are three wide. We said the odds were low that the EF high would hold. And now the J period has come along. We've now taken out that high. A very weak J period low. So made that J period low. The market's now, showing some enthusiasm to the upside. They're spreading the market out pretty, getting quite a bit of movement here. We now have, if you can stop for a second, if this holds, we have one distribution, and Jen, could you point out the lower distribution? The lower distribution is 1. Point out the second distribution, 2 distributions, and now distributions are divided by single prints in most cases. And now, if we have a third distribution, that would be very unusual. This market is already very stretched out, too many single prints on the low, a lot of single prints between the first and second distribution. Now the market is trying to make a third distribution. That is an indication of a market that is very, very stretched out. What do I mean by stretched out? It's too much emotion, too many weak traders. If you had good, solid, long-term money in this market, the market will be more elongated, it will not be as choppy, and it will show far more confidence. Remember, where was the J period low made? Okay, let's continue to play. I think the odds are low that we keep 3 distributions. I think the market is too stretched out, and I think the J period low is extremely questionable. Okay, the market's excited because it's making new highs. New highs always get attention from short-term traders, from any trader. Continued enthusiasm. Getting late in the session. The market is still very stretched out. 3 distributions. We now have a poor high because there's no excess. It is very easy to lose track of the fact that the J period low is exactly at the tick above the overnight low.
You mean the overnight high?
The overnight high, I'm sorry. A poor high because there's no excess. Okay, we no longer have 3 distributions. We have closed those distributions. Look at the KLM lows. They are all within a single tick of each other. When I see that, that is usually an indication, again, of very mechanical, weak buying. The J period low, very questionable. The KLM period lows are also very questionable. Okay, notice late in the session, we have now come back, taken out that J period low. Okay, let's stop for a second. I don't remember the exact time, but sometime on this afternoon, up near the highs, I called Jen and RJ. And I said, do you want to see a trade that I'm putting on? And the trade I was putting on was a short. And it was a short based upon how strung out the day was. Heavy emphasis on the J period low being so mechanical, combined with the KLM lows that were within a tick of each other. It was getting late in the session, and I thought there was a good chance that we would get a liquidating break. Now, I wasn't looking for any home run. It just felt like the market was getting very, very heavy late in the session, very, very strung out. That trade went against me for a little while, but not very long. Then we got the liquidation break. Okay, let's continue to play. Okay, let's stop again. On the liquidation break, and notice the end period went down exactly to half back for this session. I went into the market and I liquidated my trade at the market. Now the question might come up and say, well, it looks like a pretty good trade. Why would you liquidate the trade? And my comments are, remember, you do not have any excess on the high. I think all we saw was liquidation rather than a combination of liquidation and new money selling. Without a combination of liquidation and new money selling, the odds are very low that you're going to get a lot of downside continuation. And matter of fact, on the tape, and Jen and I did record this tape, so we have it live. On this tape, one of the things I said, when this happens, when it's just liquidation, and some of that liquidation happens because it's late in the session, when that happens, it's not uncommon for the market to work its way back up and take out that poor high. Remember, I thought I saw liquidation rather than a combination of liquidation and new money selling. Now, again, the question comes to be, well, how do you know it wasn't new money selling? I don't know exactly. I'm looking at the way the market traded throughout the session. And if it's new money selling, it's very unlikely that they wait for the very last minutes of the day. Normally, when you get very last minute of the day, that is liquidation by the shorter term traders that got overly enthusiastic throughout the session. Okay, we'll stop here. And what we're going to do, we're going to play the following day in order to, we'll put these two videos together to give you a package of is there upside follow through. Remember, value is still overlapping to higher. I'm sorry, value is clearly higher than Friday. We have an excess low. We have no excess on the high. So the odds are not good that this overall rally is completed, even for the very short term. Now you may see somebody say, well, wait a minute, I'm getting very confused. You saw this break coming, you took the break, but then you weren't excited about the break and you thought the market may go back. That's what happens with very short-term traders. They get their inventory too long, sometimes they get it too short. They get it too long, and then they have to liquidate that inventory going into the close. If it's extremely weak inventory, they can't take positions home. Either they don't have the money or their trading firm won't let them. Now, it doesn't always break like this, but the way this market ground higher, and I was putting a lot of information on the J period low being exactly at a very specific reference, and the KL, remember KL and M lows at one time were just a single tick apart. When they're a single tick apart, that tells me that I've got very mechanical buyers buying exactly at previous references. That is not what serious long-term money does. Okay, we'll stop at this point, and then we will come right back and add to this the trade on the next session.